Hello, welcome to the Trade Game channel. I'm Daniel, and today we are discussing trading cryptocurrency. Specifically, we're going to be talking about Cardano, that's ADA. ADA is a large cap coin. It's kind of a brother or a sister coin to Bitcoin. It's created a little bit after Bitcoin, and it's meant to be kind of an improved version of Bitcoin. Um, Yeah, and I expect that it will, like Bitcoin, will do rather well over the next year. So this is one that I want to start a bot on. We had one going previously, um, which fell into loss and was not trading for a little while. Or rather, its long positions fell into loss and was not trading for a little while, and then came back up in here as positions went back into profit. At which point I closed the bot at I don't know, maybe 6% or 9% profit or something like that. A small but an okay amount of a profit for this thing to be in, because I wanted to restart the bot um, with new settings so that its grid would extend down to a lower price range in the event that we have more volatility in the market. And I would prefer this bot to be a little bit less vulnerable um, than it was looking for a while there. Uh, Although this may prove it's possible that it will just continue upwards in its price action, and this I could have just held the bot and it won't matter. But this also gives me an opportunity to start the bot over again with not only a slightly wider grid on in terms of extending the bottom of the grid down a bit further. As you can see, though, I have this going up to $4, which is rather high. So when I'm extending the bottom of the grid, I'm only extending it down like a little bit. It's not a whole bunch compared to the rest of the thing. Um, so I had been a little bit. I did not need to have it set as tightly as I initially did when I started the older bot. Anyway, so we're trying to get this thing to trigger. It's got a little bit higher leverage than the last one. The last one was a 5 times leveraged bot. This was an 8 times leveraged one. I can't recall where we had set our trigger price before, but evidently it didn't hit it. I think it came close, but did not quite get there. I've already recorded a video for this one, but oh no, is my microphone turned on? I'll have to see. Okay, so I believe my microphone is on. Yes, it is. I recorded the entire last video with the microphone off, and so I'm having to redo it. But all right, learning experiences to be had every day. Um, so I had set my trigger price for this bot at around 99 cents for Cardano. I think, or I'm sort of the opinion that as the RSI for Bitcoin and Ethereum, Doge, these other big cap coins is getting a bit on the high side. Um, I suspect that they're preparing to have a little bit of a temporary correction to the downside here fairly soon, and this is going to affect the price of other coins, as the whole crypto market has a tendency to kind of follow Bitcoin a little bit in a general sort of way. Um, and so Bitcoin has had a wonderful last few days. That's great. No complaints here. But the market does tend to, after you've had a strong directional movement, um, it tends to need to or want to fulfill its liquidity, its order books, and everything that it creates as it moves in just one direction. And so after Bitcoin having had this really lovely set of green candles here, very strong bullish movement, very positive sign for Bitcoin that it might be going at least for another swing up above, further above $100,000. It also might have set a low high here. It's possible that we've got our high here and a low high here. And after such a sequence of green bullish candles, very bullish candles, it would make sense for this to have a couple of red bearish candles just to correct downwards a little bit and consolidate before hopefully continuing to move to the upside. But we'll have to see. Some of the chatter that I've been hearing, and also some of my speculative reasoning on this, says that until something significant happens in the news or something happens to push Bitcoin into price exploration at a higher level, possibly around $120,000, we're sort of expecting Bitcoin to range between perhaps $88,000 or $89,000, kind of about the bottom of this wick here on this really crazy day we had, up to around $110,000. And so, while that is by no means a guarantee of any sort, we are sort of expecting it to be in that range. A lot of people are saying 108 through 88. I'm simplifying it a bit to 110. In part because I'm not placing any particularly risky positions on any of this stuff anytime soon. But, right, good stuff. So, I'm expecting a little bit of a correction to the downside here. While Bitcoin may be starting a bullish leg, that doesn't mean that it's necessarily just going to print green candles all the way back up to the top. It's going to want to range a little bit as it goes up, if it is indeed going up. And so, with on the 4 hour, the RSI being kind of high. Hey, where am I? Oh, here we go. Kind of high, and I believe that it's pretty high. Yeah, our RSI indicator here is given a nice, strong, relatively clean bearish signal, a signal to short. For Bitcoin, my expectation would be that Bitcoin is going to be bearish for the next day or two. Perhaps having formed a peak here, it also might be a little bit bearish and then form another peak and then go down. It just sort of depends. We'll see how things unfold. It could also perhaps do just a little bit of consolidation and then continue up. I mean, there are many possibilities, but I would expect a correction, or I am anticipating a bit of a correction to the downside, which is relevant to our topic of discussion because we're talking about ADA, which is a brother or sister coin to Bitcoin, and so is going to be associated with it quite a lot. And really, the entire market tends to sort of swing along with Bitcoin often. So Bitcoin is usually relevant to all of these coins. The price action of Bitcoin is. So so Cardano has had a pump along with Bitcoin recently. If Bitcoin does start a bearish move or a bearish correction down, then Cardano likely will as well. And so we're going to try to hopefully catch this at a reasonably low point before it goes back up and get a decent entry for a long so that our bot can start hopefully with a relatively strong long position when it begins out, and it can build up a little bit of margin through the action of its grid arbitrage. And in doing so, extend its liquidation value downwards, making it more secure. This being an 8 times leverage bot, I'm not 5 times to 10 times leverage is relatively safe for these bots. 10 times leverage, in fact, is the default. I'm being conservative by using 5 times for these, but you know, it's all a matter of kind of where your comfort zone is and if you're how much you're willing to risk. So I'm trying to remember right off the top of my head, honestly, how I managed to set this entry point of 99.4. Because I did make another video in between that one and this one. Here we go. All right, so our Heikinashi does sort of indicate, it suggests that we may continue with these green candles on the Heikinashi, and that we maybe have not reached the apex of this peak yet. The oscillator also kind of suggests this, that we may have a little bit further to go before we actually get to the top of this pump for ADA. These white pluses have lit up, which is the way you can read this indicator. You typically are going to look to enter positions when these white crosses are lit up. When they are black, you would sort of not necessarily want to enter a position at that time. I have them set so that they're black, and they just sort of disappear, so that it appears as if there's nothing there. And then when they become white, they light up, and you can see them really clearly. But you can always change the settings around to your liking in the settings here in TradingView. This is just sort of how I have them set, because I personally like them that way. Anyway, so this oscillator has a little bit to go, it looks like, before it gets up here, but I don't know that we can count on this having a big double wave to the upside the way it did in November, because that was a pretty tremendous move in the market following the election results. There was a lot of excitement there for a while. I don't know that that's necessarily going to continue. It might, but yeah, well, anyway. Okay, so we need to figure out, therefore, if we're going to try and set a trigger price, and we want to set this as if we're trying to buy the dip and start a long position, kind of in swing, which would normally be a little bit lower leverage than 8 times leverage. 8 times leverage is a little bit too high to be a swing trade. Swing trades are usually 3 times leverage or 5 times leverage, or somewhere in that area. But this being a grid trading bot, it can build up margin in the position as it goes and secure itself against liquidation over time, which makes it kind of safer to trade with very slightly higher leverage, at least in theory. And that's what we're going to try to do here. But also, because we are increasing the leverage a bit over the 5 times leverage that I was using before, I'm going to try to be a little bit more particular about where we actually start the bot. So on the daily time frame, we've got a few indicators that we can look at to help us provide us some guidance, perhaps, in where we might set our trigger price for the spot, which is to say where we might set our entry price for our long on Cardano. So let's see, demand area up here, supply area up here. This doesn't really help that much. I don't really expect us to actually correct down to the level that we got to on this day. We set a pretty low wick on a lot of other currencies as well on that day. So it's definitely an area of great support, great demand. We went way down on this days, and Bitcoin along with Bitcoin, quite a few of these currencies that I'm trading set a wick kind of like this, printed a wick like this, which is actually a very encouraging sign if you're bullish on these and if you're planning on trading long, because this wick went all the way down to here, which means it was quite a lot of selling pressure all at once. But then it recovered all the way back up and actually closed green, And so it got pushed down really quite far at the bottom of this after this period of selling. And then it got way down to the bottom, and our selling pressure just seems to have gotten exhausted, and then we had a nice green candle, which is a very bullish sign overall in the sort of longer term. All right. So this is all well and good, but it doesn't really help us much in terms of trying to set a trigger price, because I don't really think that we're going to get down that far. At least not on our daily time frame. Fair value gaps can also be useful when it comes to setting these levels. Fair value gaps tend to be created and then filled in by the market. So you have a green one that was created here during this upwards bullish momentum that was satisfied here when the price action dipped back down into it, and then it came back into it again. Market likes to revisit these areas. Here, one was created on this red candle, and then the price action came up and satisfied the market liquidity all the way up to here. Even went through all the way through the trade value gap, fair trade gap, and so we've created through this bullish movement some more here. Now, these are not always satisfied, and you could strictly speaking say that this top one was actually satisfied by this wick coming down and touching it, but the smaller ones below it have not been filled in, and so it's possible that we may see price action in the market revisit some of these levels later. But it's also possible that it won't happen. This is not a 100% guaranteed to happen kind of thing. Nothing is really guaranteed in the market. But how much does that help us in terms of setting this trigger? Well, the trigger, as I had said it before, is sort of at the bottom of this fair value gap that was created here. And so if the market does go down and does satisfy some of these lower ones, at 8 times leverage with the bot going long, that's not going to liquidate the bot. That's close enough that if it just goes to here and then swings back up, the bot will be fine. So it doesn't really create an issue for us if we set a trigger value in this area. But it's also possible that these gaps will never be satisfied, will never be filled in which case, more's the better for us. So I'm not seeing any reason to invalidate the proposed trigger price of 99 cents. Looking at these fair value gaps anyway. We should also probably review this on the 4 hour and 1 hour to kind of see what we're looking at there. Yeah, got some gaps here. This one's already been filled in. Big one here, 2 bigger ones down here. So we got areas of support in this area, fair value gaps in this area, and I see we have an area of interest right around here that's also in this fair value gap, and this is probably how I had set this trigger price before, was on this area of interest, because that does match up nicely with this fair value gap that's kind of in the middle of the gaps that were created during this last bullish movement. And if that is filled in, that should trigger our bot. And hopefully, even if it does go down to these lower levels, that shouldn't be enough really to liquidate an 8 times bot. There should be enough wiggle room that will be all right in terms of a bot with comparatively sort of moderately low leverage at 8 times. But it also, the grid on this bot being set down to 75 cents, even if the price action does continue down below the trigger price, it should be trading the ups and downs as it winds its way down, and hopefully that will help to hedge against possible liquidation if it does cross our trigger value and then continue down for a little while. Yeah. So I'm seeing areas of interest right around where this was set. We don't have to be quite as picky about these as we would with, say, a higher leverage bot. You have to be much more careful with higher leverage bots because they're much more prone to liquidation. But with 8 times leverage, it shouldn't be tremendously difficult to get this going. It's just that it takes longer for it to build up margin in the position in the bot, and it also benefits less from the action of the grid arbitrage trading compared to the higher leverage bots. So we have support resistance channels that we can look at. We've got one big one up here that coincides with this area of demand. That's great, and if I remember correctly, I want to say that we had set a trigger price kind of around 105 before, and it just barely missed it with this one, which is a shame because we could have been trading this volatility up here. But it's perfectly fine that it didn't do that. It's just that now, since we didn't catch that and don't have the margin from the bot having traded this action here, price action here, we're going to want to try to see if we can predict what's going to happen on the bigger time frame and have it activate further in the future after this perhaps corrects down a little bit. And we're going to try to somewhat reasonably catch a dip that may be coming up here. So might not be, though. This could all be just me talking and speculating to the internet, but that's at least my plan as it stands. This is the hourly chart. Notice we have an area of interest with our indicator fairly close to the activation price that we had set before, or that I had set the first time I recorded the video. Right. Support and resistance. Oh, yes. And it just wasn't really, nothing was really getting flagged in the range we're looking for with these two indicators when we look at it on the daily. So you kind of have to zoom in a little bit in order to get any useful information out of it. The other thing that we can kind of fiddle around with is we have our oscillator. It's a little tricky trying to actually make this be super useful in some cases, though, because we sort of have these two peaks that have happened recently, but they don't really match up well with the oscillations that were happening before it. You can kind of use these in a really broad sense to try and predict where the oscillator is going to hit its next peak. But I suspect that this is going to go back to having shorter waves after these two big ones. I think that we had a primary big green wave here with price action moved up to a new level and had kind of sort of price discovery for a little bit. And then a big move to the downside after that. And then I think we're going to go to a shorter oscillation pattern probably. Maybe is going to be kind of my guess when it comes to this sort of thing. Like we may, if you sort of use this wave and then, yeah, here we go. Something more like that, I think might be a bit more reasonable looking at what may happen coming up in the future. So that being the case, if we think that that's what's going to perhaps happen, then we would be sort of looking at something a bit more like this on our chart. Excuse me, I am still sick. I have some sort of respiratory virus, I think. Hopefully, it will go away fairly soon. I'm taking all of the medications, doing all of the things that I usually do to address that. But at the end of the day, until the fever breaks and and I don't have much of a fever, so I'm hoping it'll break fairly soon. I'm just gonna be kind of stuffed up and sniffly and coughing and miserable, but that's how it goes in life. So we don't have a nice trading channel or real pattern that we can use to reasonably try to extrapolate this outwards. If this thing wants to go up and create a second peak, a double top, perhaps an equal high, that would satisfy the remaining green area of the oscillator, and it would be around here that might happen, perhaps. Well, we'll have to see. It might make a new, slightly higher peak right here. That sometimes happens in the market. And then we may be looking for a move to the downside, perhaps somewhere around here, in which case we'll be aiming for hopefully around 99 cents as our trigger. And this trigger can always be changed later depending on the price action in the market and what we think might happen there. I really do have a funny feeling that this is going to be slightly too long, although, I don't know. Can I make you squeeze in just a tiny bit more? How does that line up with the momentum indicator? Oh no, I lost the oscillation thing. Well, that's all right. This is still reasonably on point. It's a little bit further to the left, perhaps. I don't know. I can only fiddle with this stuff so much, really, before it stops being useful. So just to kind of eyeball things a little bit, we can use this to create a bit of a benchmark. I would think the price action probably isn't going to reach its dip at this point. I would think it'd be more likely to reach its dip somewhere between these two lines. Perhaps as far as here, but more likely kind of in this area. And we will see if this goes down and reaches our trigger value, which it might and also might not. Only time will tell. And so we're just going to have to let this one bake in the oven for a little bit longer before we do anything else with it. And as I pointed out, we may move this trigger value up a little bit if it doesn't seem to be doing as much of a move to the downside as I am sort of thinking it might. Let's see, nice bullish divergence, and then it, of course, pumped. So that's not really. That's a bullish sign overall, but we did have a pump right after that, so that may not be terribly useful in that regard. Oh, what was I going to look at? It's good to check sometimes our combination Fibonacci and Bollinger Band indicator. Does it kind of see where we are in our Fibonacci bands, in our Bollinger Bands at the same time? Yeah, because we got up above our Bollinger Band for a little while here, which would have indicated that these areas might be a good time to start looking for a short, possibly from here or here, although you might have gotten pushed out or stop lossed out if you tried to enter a short here. So waiting for it to range up when it is in price exploration, having a really big pump for a little bit before starting a short would be better. Same thing on the downside. But so we are kind of high on our Fibonacci levels now, but we probably have gotten down into the areas where we expect things to retrace in terms of Fibonacci levels. We're still above the average, though, and nowhere close to the bottom Bollinger Band. So all of this is to say that it would not surprise me terribly if we did have a correction, at least a little bit down, as we are sort of high on our Fibonacci levels. We got far enough down that no particular reason to believe that this couldn't continue upwards, but it's just if we were lower, say on this scale as we sort of were here, I might be more speculating that we might be due for a swing up, whereas here, because we're higher on these levels, I'm inclined to speculate that we may be due for a little bit of a swing down. Anyway, so there's that one. Also, I think I already looked at this. Yeah, we already looked at this guy. Some of these RSI indicators can be kind of fun. This one I like quite a bit. It also is indicating, as it did here and here, a little better. Although here, gosh, it would have been so hard to justify entering a short here. Just all of the discussion online and stuff was very, very bullish at that point. And you don't really see these lines crossing back over until here. So, well, anyway, at least on this guy, we do sort of look like we're approaching that point where you might want to enter a long. We haven't gotten up over here, or not a long, a short rather. Pardon me. So this indication suggests that it might be an okay time to enter a short on Cardano, although it is not really giving a strong signal the way you'd want it to. So that suggests to me we might have a little bit more momentum left to go before we correct downwards. But it also depends on what Bitcoin does. If Bitcoin decides that it wants to sneeze and go down and take a temporary correction downwards, or just a legitimate price shift downwards, that will tend to cause other associated assets to also take a downwards direction in their price action temporarily, along with Bitcoin, just because that's kind of how the crypto market currently works. So yeah, I guess I'll leave these on the chart here, and we'll kind of see how things play out. But hitting the exact bottom of a dip, if a dip occurs, is not as crucial on this one as it is on a higher leverage bot. So I'm hoping this is a reasonably a reasonable level here, but I kind of don't want to set it back up to a super high place where it was before, just because we seem to be exhausting the bullish momentum that we had here. And so it's not necessarily like a really great time to go ahead and enter a long position on Cardano in the shorter term frame of things. Instead, we're going to want to wait for it to correct downwards and try to catch some sort of a dip, or at least catch it during its downwards correction, but not at the top right before it corrects downwards. To have the bot start buying in and creating long positions. So, all right, so we've set a trigger price of 99 cents, 99.04 cents, or 0.9904 USDT is the proper way to say it. I just use dollars and cents because USDT is fundamentally meant to take the place of the US dollar in the cryptocurrency space. It's a stable coin, and the parlance, the way that Americans talk about things, we talk about US dollars, USD, and dollars and cents. So it's just sort of more convenient for me to talk about it that way. All right. So, and once this triggers, our grid will be going down to about 75, 76 cents for Cardano, and extending all the way up to $4 for Cardano. We will be trading, the bot will be trading much more frequently in this lower zone when it starts out. And then as the grid lines extend up further away from where it begins trading, they will get progressively wider and wider as they go out until they get to their widest point up here around $4. But that's perfectly fine. The bot will actually get more efficient in how much money it makes from its arbitrage trading, from its grid trading, as the lines get further and further apart, because the amount of return on investment that's going to the trading fees to the exchange will be proportionally less as the grids get further and further apart. So it becomes fundamentally more efficient trading relative to the amount you're paying out in fees. We do it this way, and we have the bot trading more frequently with tighter grids in the beginning, because these bots are prone to getting liquidated shortly after they're opened in long positions, and we don't want them to get liquidated, because then we lose all of the revenue the bot has created and also all of our investment. And so in the beginning, you really want the bot to trade frequently and just eke out as much margin as it can, even if it's not as efficient, because you're trying to get as much margin right at the beginning in a relatively short period of time, because the more margin you have, the further down your liquidation value goes, because if price action goes against the direction that you want to trade, you can use the additional margin built up through the process of grid trading, grid arbitrage, to help secure the bot against liquidation. And so this bot as a trading entity becomes more resilient and more resistant to being liquidated in the event of a downturn in the market the longer it is trading. But these are more prone to liquidation early on, and so we want to try to eke out as much a little margin as we can by having it trade a bit more frequently at the beginning, to help expand the liquidation value down a little bit more. Not that we're going to lose a heck of a lot of money to trading fees with futures trading. Typically, the fee structure for futures trading is much cheaper than it is in spot trading, because you do have to pay interest on your open positions over time. So the exchange is making revenue from trading fees and also from charging interest on the open positions. Whereas with spot trading, they can't charge you interest in spot trading because you just own the coins outright, in the same way that if you purchase shares of stock on the stock market, you just own those shares outright. Whereas with leveraged position, you are putting down money in a contract in order to purchase a larger amount of that asset than you could purchase normally. And so you pay a little bit, usually a very reasonable, though, amount of interest on the amount that you are borrowing when you trade futures. And it's typically quite reasonable. It has to be, otherwise people wouldn't engage in that type of trading, really. And using this technique of grid arbitrage helps to offset the cost of having that interest that needs to be paid, but also can produce a significant return just on its own. It's worth doing it in spot, absolutely, and it's also absolutely worth doing it in futures, I think, which is why it's what I'm doing. So this is the Trade Game channel. I am Daniel. It's January now, January 7th. Thank you for watching and listening. Please like and subscribe. It helps us to grow our community here, and we sure would appreciate it. God be with you. Please be good to one another, and I will talk to you later.